$2,200 a kid, sitting in a check most parents already get. Plus, a brand new account the government just seeded with real money this year. Most people are doing nothing useful with either one. So let's actually get into why. Real quick, this is education, not a personal recommendation for your specific situation. I'll say more on where to actually go for that later. So, what's actually going on with the child tax credit right now? $2,200 per child, and it's permanent now, adjusting with inflation starting this year. Up to $1,700 of that comes back as a refund, even if you owe zero tax, as long as you've earned at least $2,500. It phases out past $200,000 single, $400,000 married. Here's the part worth sitting with. 19 million kids in this country get less than the full amount, or nothing at all. And here's the argument people miss. That's not a fringe group. That's 1 in 4 kids in America. If your instinct is, that's a low-income problem, not mine, that instinct is wrong for a specific reason. The refundable piece phases in slowly with earned income, so plenty of solidly middle-class families with irregular income, a parent between jobs, a self-employed year, still fall into that gap without realizing it. Okay? So what's this new Trump account everyone's suddenly talking about? Officially, it's Section 530A, launched this July. Kid born between 2025 and 2028, the federal government drops $1,000 in automatically, no strings, once you file the election on Form 4547. Anyone can add up to $5,000 a year combined. Employers can kick in up to $2,500 of that tax-free. It grows tax-deferred until 18, then becomes a traditional IRA in your kid's name. Here's why people get the comparison wrong, though. Everyone wants to stack this against a 529 or a Roth IRA like it's competing with them. It isn't. A 529 bets on college actually happening. A Roth needs your kid to already have earned income. This account needs neither. So the real question isn't which one wins. It's why you wouldn't run all three at once, since none of them touch the same dollar. So why does this matter more than just free savings account? Why should someone actually care? Because the alternative is what almost every family already does without noticing. That refund check lands, and it becomes grocery money, becomes the credit card payment, becomes nothing. Here's the redirect that actually changes that. If your kid has any earned income, that refund can fund a custodial Roth IRA for them, dollar for dollar, matched to what they actually earned. Whatever's left goes straight into the Trump account instead, which doesn't need earned income at all. 1 check, 2 accounts, fully covered, no extra money required from you. Can that be made any more clearer? Sure. 1 kid, full $1,700 refund. She's 14, babysits weekends, earned about $800 this year, reported properly. $800 goes into her Roth, matching her income exactly. The remaining $900, which the Roth can't legally accept since she didn't earn that much, goes straight into the Trump account instead. Next year she earns more, the Roth gets a bigger share automatically. Now flip it. 2 kids, a 9-year-old with no job, and a 16-year-old earning $3,000. Same refund, totally different split. The younger kid's entire share goes to the Trump account, no math involved. The older one's goes to the Roth. Same household, same check, 2 different destinations, and neither one required you to make a new decision that year. Anything else stacking on top of this? Yeah, actually, Colorado, California, New York, and Vermont all run their own state child tax credit on top of the federal one. Rules vary. Some cap it under age 6, some calculate it as a percentage instead of a flat number. If you're in one of those states, that's a second check you might not even know you're eligible for. So if the money's just sitting there, why does it keep disappearing instead? 3 specific reasons, and I'd bet you recognize at least one of them immediately. First, that refund gets mentally filed as Christmas debt payoff money the second it lands. People treat a refund like a bonus instead of what it actually is, money that was already theirs. Second, Parents hear Custodial Roth IRA. Think, my kid doesn't have a W-2, so I can't touch this, and stop right there without checking if that's even true. Third, and this is the quiet one, 3 accounts, 3 different rule sets, and the brain just freezes. Because picking correctly feels harder than picking at all. So nothing gets picked. What does that actually add up to, though? Realistically? I want to be straight with you here, because a lot of people throw these numbers around irresponsibly. Spend the refund every year instead, and by 18, about $122,400 has passed through your hands and built exactly 0 long-term wealth. Redirect it fully into a Max Trump account and the White House's own Economic Advisors Project, around $303,800 by 18. But that assumes a 10.3% return, which several independent analysts call optimistic. Their own conservative case at 5.4% lands closer to $156,000. Independent advisors running a standard 7% land near $185,000, which tells you something. The honest number and the flashy number aren't the same number, and you should know both before you get excited about either one. And if you just leave it alone after that, independent planners using that same 7% put it somewhere in the 7-figure range by your kid's mid-40s to mid-50s, anywhere from around $500,000 to well over $1 million, depending entirely on how long it sits untouched. I'm giving you that wide range on purpose. Anyone who hands you one exact number decades out is guessing, and the honest answer is always a range, not a headline. All right, the disclaimer I promised. I'm not a licensed financial advisor, just a tired parent with a calculator and a stack of tax forms. Every household's earned income, state, and eligibility details are different. Talk to an actual tax professional before opening any of these or redirecting a refund. It's definitely worth sticking around for more of this. We're doing this every week. The accounts nobody bothers explaining clearly, broken down straight, however much sleep we got the night before. Go check if your kid actually qualifies for that Trump account seed money. It's sitting there right now whether you claim it or not.